Okay, we're trying this again. I did a live video a little bit ago and nothing happened. Apparently it didn't post, it didn't do anything. So we're trying this again. Okay, we've got someone on here. I'll wait just another minute or so and we'll see. Okay, we've got 3. Okay, so I'm hoping that this one goes well this time. I only spent a half hour trying to get the last one up and it didn't go through. So let's try this again, shall we? Good evening, everyone, and welcome to my live video titled DIY Bookkeeping, What Is It? I am going to apologize now because I cannot take off my glasses. I am practically blind without them, and I know that I've got a huge glare coming off of them, which is actually to my benefit a little bit. So let's move forward. I am Lisa, Miss Elsie, Culverwell, owner of Miss Elsie's Bookkeeping, located in Crowley, Texas. I know most of you know me by Lisa or Miss Lisa. And however, every Lisa on the planet can attest that Miss Lisa is not original. Every person we run into, stranger, friend, acquaintance, calls us Miss Lisa without fail. Miss Elsie was discovered this year. I was working for a church that had a preschool attached to it. Of course, the teachers were all called Miss whatever their names were. The preschool director told me we already had a teacher whose name was Miss Lisa, so they couldn't call me that. She said she was going to have the kids call me Mrs. Culverwell, and I immediately screamed no. Adults have a hard time pronouncing it. I don't expect kids to try. So we decided to stick with Miss Lisa and hope for the best. Earlier this year, while walking to the director's office, I ran into Miss Lisa and she had a student with her. The teacher told the student, "Say hi to Miss Lisa." The student kept looking at us so confused and finally told the teacher, "I already did." The very next day, they collectively came to my office and said they unanimously agreed that my new name was Miss Elsie because of my initials LC. It just so happens that the names Lisa, Elsie, Elizabeth, Lizzie, Liz, etc., they're all the same name and all have the same meaning gift from God. Hi, Jay. Oh, I'm glad this is finally working. Although I've done one other live video in the past, it's been a long time, so please bear with me. Here's a little bit about my professional background before we get started. I've been in bookkeeping for 20 years, where I started off as a receptionist. However, shortly after being hired, they reorganized the company and made me the accounts payable specialist, and I absolutely fell in love with it. I left that job, unfortunately, a year and 1 month after 9/11. And again, unfortunately, I didn't do my research about the economy at that time. I moved to California and was shocked to see that there were no companies hiring, absolutely none. Always amazed to hear, huh? So what they were doing, though, was utilizing temporary agencies. So that's what I did. I worked with a lot of these agencies, working with many different industries, doing different aspects of accounting to gain my experience. You see, to be a bookkeeper, you must have at least 3 years of experience. I did things like accounts payable, auditing, bookkeeping, assistant controlling, you name it, I did it. Looking back, I'm glad that's how I was able to get where I am today, because it showed me where my weaknesses were and where I needed to learn, grow, and expand my knowledge. Once companies were hiring again, I found myself doing staff accounting, full charge bookkeeping, administration, even finance management. Something that always seemed to fall in my lap, if you will, was every time I started a new job, The manager would always say something like, I know you want to get started, but before you do anything, the previous employee made a mess of things. I need you to fix it. I never understood why it was always me this happened to until now. It really prepared me for what was coming. I worked for a construction company for several years. When I came on board, the previous person, who had only been there for a week, decided to take a different job. I met with her and the owner for all of 30 minutes on a Saturday. There were stacks upon stacks of paperwork lining every square inch of every wall of the office. She worked so hard, so quickly to tell me what everything was, but to be honest with you, there was so much that I really didn't hear everything she had to say. My mind just kept going to, wow. I started laughing hysterically in the middle of one of her sentences. She stopped, she got so upset and asked me why I was laughing. I said, which has become my motto, because laughter is better than crying. Crying won't get me anywhere and won't get the job done, but laughing will carry me through. It turned out there was 2 years worth of work that had been done wrong or not at all. After a year and a half, roughly, I had everything in the computer and we finally knew where the company stood. Broke, and they didn't know why. When I was cleaning everything up, we realized that certain jobs had been underbid and lost money on every one of them. The owner finally decided to shut down the construction side to concentrate on the excavation, and now he's making more money than he ever has. My last position was with a church, the same one where I got Miss Elsie, where I was the finance manager and the church administrator. In other words, I was the busiest person in the office by far, even busier than the pastor. When I started the job, they said, we know there are a few mistakes, but we think you should be able to take off running within a few days. Not knowing what a mess it was that the previous employee had left. Nothing could be salvaged at all. It needed to be recreated. And since they hadn't received a single financial report in a year and needed to know why certain things appeared as they did, I needed to enter everything manually with every single speck of detail there was, avoiding everything the previous person had entered. They made me promise that I'd have financials ready for them in 6 months. And after working 12 to 16 hours a day, 7 days a week, usually, I had everything done for them in 5.5 months, making this the biggest, baddest career-making cleanup job that there ever was. They finally knew where all of the money went and knew to put new policies in place to prevent any of that from ever happening again. You see, these cleanup jobs really prepared me for what I do now. I diagnose the books of small construction and landscaping businesses to give clarity, focus, and quality. This means I assess the wounded books and give a proper diagnosis in order to come up with a plan to revive or reset. This gives the client clarity of the financial health of their business, allows them to focus on making money, and spend more quality time with their family. In the midst of COVID, most businesses have a hard time paying their bills, paying their employees, and even remaining open. I've found that many business owners, because of COVID, don't have the means to bring in a bookkeeper or a CPA, or are afraid of what's around the bend. They say, what's next? Or what happens if they shut us down again? Many owners are attempting to do it themselves, it being the bookkeeping, in hopes of saving money. Unfortunately, what they don't realize is that when trying to do your bookkeeping yourself, with little to no bookkeeping knowledge, it can become very costly very quickly. And a few things can happen because of this. One, they want to expand but are being turned down for a small business loan because they either have no financials or they're incorrect. Due to COVID, they may be asking for a loan in order to stay afloat, especially if they didn't receive assistance from the government. Two, They file their taxes, and before they know it, they're getting a notice in the mail from the IRS to tell them they're being audited. And 3, most business owners, when they do their own bookkeeping, have no real idea how much money they're making or spending, which means making any decisions based off of their net income is impossible. Most CPAs will charge between $250 to $600 an hour if they do bookkeeping. Some will charge less to do the bookkeeping, but most only do the accounting. And the reason I tell you this is because in Texas, unlike, and I don't know all of the states, obviously, but in Texas, for us, and for a bookkeeper to impersonate a CPA and vice versa is just like someone trying to impersonate a police officer. It's illegal. And so if you are a single CPA, you are not allowed to do the bookkeeping. So you either have to farm it out or you have to refer. The only way you can do the bookkeeping is if you have a firm, which requires you to have at least one person on staff that does the bookkeeping. But I can guarantee you that they're still probably going to charge a heck of a lot more than what a bookkeeper will. Bookkeepers will typically charge a flat fee based on gross revenue, a set price per transaction, which is very inaccurate in my opinion, or an hourly rate between $40 and $100 an hour depending on experience. As daunting as those figures sound, it's still less expensive than hiring an employee to do your bookkeeping. And when you look at hiring a bookkeeper full-time as an employee, you can figure that you're going to be paying them anywhere between $30,000 and $60,000 a year, which equals out to typically right around between $2,000 and $4,000 a month. So we are much less expensive. This is why I'm doing the DIY series, because the average small business owner wants to do it themselves. I don't want to see those scenarios happening to them, so I'm here giving pointers and a series of how-to tutorials. So, what is bookkeeping? The Merriam-Webster Dictionary states that bookkeeping is the act of recording accounts or transactions of a business. In other words, bookkeeping is the input of information into accounting software or on a paper journal in order to keep track of your finances. There are 6 things that your finances are compiled of, and I'm going to add just a couple more. 1, sorry, I'm still trying to find that camera. 1 is assets. 2, income. 3 is your cost of goods sold, also known as COGS. 4 is your liabilities, your owner's equity, and your expenses. The next 2 don't necessarily determine your finances, but are key to making sure that they're done right. The 7th is ask my accountant, and 8 is reconciliation discrepancies. Each month, you must keep track of all of these in order to accurately have a record of what you've made, spent, owe vendors, and are owed by customers. This sounds fairly simple. Keep track of assets, income, COGS, cost of goods sold, liabilities, owner's equity, and expenses. No problem, right? Wrong. So what falls into these categories? And let me back up before I go further. I say wrong because there is so much that goes into your bookkeeping that when you're doing this yourself, it will make your head spin. So this is why I am doing all of this, in order to help simplify things for you. So what falls into each of these categories? Assets are your bank accounts, vehicles, buildings, equipment, things that you own, the big things, big ticket items. Income. This is all sales that you collect from customers, including discounts. Cost of goods sold, or COGS, Any materials you purchase that you use on jobs like permits, toilet rental, subcontractors, I know I'm using the construction stuff, this is also the actual materials that you're using on each and every job. But please do not get this confused with tools, screwdrivers, hammers, drills, crowbars, anything like that. Those are expenses. Liabilities are your payroll taxes, credit cards, loans. We've actually got a lot of those. Owner's equity is money invested or paid in draws or for personal items. And expenses, money paid out for utilities, tools, rent, supplies, insurances, advertising, cost of labor, the list goes on and on. So let's break all of these down, shall we? Your assets. Your assets compile of a few things. Your bank accounts, those are self-explanatory, money in, money out. Fixed assets, these are vehicles. Don't get these confused with the loan for the vehicle. This is the vehicle. Buildings and building improvements and equipment. Then you've got other assets. So these are security deposits and retainers, amortization and depreciation, which we'll get into at a later date. And you've got accounts receivable, which is all of the money owed to you by customers. Your liabilities compile of quite a few things. Long-term liabilities, these are notes payables. These are loans on vehicles, your mortgage, any of your loans that are going to take a long time to pay off. These are a long-term liability. When you are paying on a loan, the attention to detail is key. You see, you have your principal and you have your interest. Interest is actually an expense, so it must be broken down. If you account for interest as a part of the principal, your loan balance will never match what your loan statement says. When you go to reconcile, it will never come out right, and when you pay off your loan statement will be at zero while your software will still say that you owe money due to the interest. Other current liabilities. This is your longer list. Payroll taxes. If you have a third-party payroll company that's processing your payroll, you shouldn't have to worry about your payroll taxes. The payroll company should be paying them for you from the money that they deduct from your bank account, which they report to you. If you use Gusto, be very careful if you're working with employees who live in a different state. Gusto is a self-serve payroll company. In other words, they'll pay the payroll taxes if you set up the state agency you're paying. So if you start working with a brand new state, New York perhaps, Gusto is not going to set that up. You have to set it up. But if you don't know that, you're going to be collecting, or they're going to be collecting all the payroll taxes and they're not going to go anywhere. Gusto does, like I said, Gusto does not do this for you. So keep that in mind. Don't get me wrong, Gusto is an amazing platform and the payroll they do is outstanding. Just be mindful about the self-serve requirements before you do anything. If you are doing the payroll yourself, you need to keep track of all payroll taxes and the exact amount in order to pay the state agencies. Forms 940 and 941 will have to be filed every quarter and at the end of the year with the exact amount paid in taxes, as well as the exact amounts that you paid your employees. Credit cards. When you're paying on a credit card, the way that this works is different than if you were to be purchasing it from a checking account. Everything that you spend for purchases gets categorized to the appropriate places. However, when you pay the credit card bill, you're paying down the liability. In other words, the liability goes down, showing that what you owe is less than what it was before. The interest, just like with the loan, also applies to credit cards as well as late fees. Prepaid expenses. These are any expenses that you've paid for in advance for any given time. For example, you decide to pay your insurance for a year instead of month to month. This is a prepaid expense. We'll get into that another time. Rents in trust. This is the offset to your retainers and deposits in your assets. This money is collected on behalf of another individual or company. If someone is renting an apartment or house from you, you would typically charge them a security deposit. Legally, you cannot spend that money because when they move out, if they've left the place clean and blemish-free, the money gets refunded back to them. The same applies to retainers. I collect retainers from my clients. By law, I must hold them in a separate account because the money doesn't belong to me. They can either agree to have their bills taken from a retainer, at which point I'll deduct that amount and they can replenish when it gets low, or it can be held until we part ways, just like a security deposit. If they don't pay for the services provided at the end, then the services are taken from the retainer and the balance is sent back to them. And finally, personal loans. A personal loan is different than a loan on a vehicle, equipment, or mortgage. Personal loans may or may not have interest and typically are paid down within a few months to a couple of years. These are not your typical personal loans like you would get at a bank. This is a personal loan that you would get from somebody that you know. You have to borrow money from your boss because your car had a blowout and you have to replace all 4 tires. Whatever the scenario, that's going to be that type of personal loan. And then, of course, the last thing in your liabilities is accounts payable, which is all of the money that you owe vendors. Owner's equity compiles of 2 things. Owner's equity is pretty self-explanatory. Owner's investment is self-explanatory. Any money you put into your business and is an owner's investment. And secondly, owner's draw, otherwise known as personal purchases, and owner's pay. If you're using a business checking account, and I want you to listen to this because I've had so many people that fall into this problem situation. If you're using a business checking account or a personal checking account, so this goes both ways, or a credit card for personal items. So if you're using a business account for personal items or a personal account for business items, you're commingling funds. And this is not recommended. It muddies everything and it becomes a huge problem. Every transaction must be accounted for. So when you're using your business credit card for a gift for your spouse, for example, this now must be accounted for. Whenever you make a personal purchase on the business, this is called owner's draw. Also, unless you're paying yourself back for purchases made for the business, because then you're paying yourself back for an expense, you would use this account for owner's pay. As an owner, unless you're paying yourself on payroll, which is a completely different method, your pay must be accounted for. When you pay yourself, this is simply counted as personal income. And that's the thing about making personal purchases on the business. That has to be accounted for as personal income, and that's the way that it will be reported on your taxes, unfortunately. Your expenses, again, it's your insurance, office supplies, license, tools. Most computers, we'll get into this later, subscriptions, utilities, that's just to name a few. There are so many. It is whatever you have had to pay in order to make your business run. The Ask My Accountant category. Ask My Accountant is a simple way to track something that you have questions about. If you're unsure where something is supposed to go, this is a great place to put it. This way, when you go to file your taxes or meet with your CPA, if you have one, This will stand out and that question will be asked. When you file your taxes, however, this amount should be zero because it hasn't been categorized where it belongs. So your CPA or your tax professional is immediately going to see that and they're going to say, okay, what is this? You need to come up with a receipt or something, and then you'll have to fix it before your taxes can be filed. And finally, reconciliation discrepancies. These happen when you try to reconcile an account incorrectly. We'll get into this later, but if you have anything other than zero in this account, it's not a good thing. Having even a penny in your reconciliation discrepancy account means that something has been done wrong and things need to be revised, deleted, reworked, and the error needs to be found. So that is in for now. Does anybody have any questions? Okay, so this was just a summary of what each thing is. In the next video series, we'll be discussing assets and liabilities, their importance, and how to record them. So tune in next Wednesday at 7 p.m. Central Standard Time for the next video in the series. I thank you. Have a wonderful evening.